Okay, so, we always like to dive deep into the stuff you send our way, and today is no different.
Yeah.
You've sent us this document, Estrategias Efectivas de Trading de Criptomonedas en 2025. Enfoques para maximizar la rentabilidad y minimizar el riesgo en mercados volátiles.
Yeah,
It's quite a mouthful.
it is.
But you know what I think the real mission here in this deep dive is to get past all the jargon
Sure.
and, figure out what are the actual strategies that we can all use
Yeah,
to navigate this crypto trading landscape in 2025. I
absolutely.
mean, it's coming up fast.
It is coming up fast, and the document really highlights this too. Like,
Yeah.
the crypto market is not what it was even just a couple of years ago. We're seeing these huge institutions getting involved, regulations are starting to take shape.
Yeah.
We've got these incredible technologies, artificial intelligence. Everyone's talking about AI.
AI.
And this thing called tokenization of real-world assets, basically taking things like real estate or art and putting them on the blockchain.
Making them tradable.
Exactly, making them easier to trade, more accessible.
Right.
So it's a very different landscape.
Yeah. And that's something that the document really emphasizes right from the beginning.
Mm-hmm.
This isn't about, just chasing hype or, following your gut feeling anymore.
Right.
If you want to make consistent profits in 2025, it's about data.
It is.
It's about having a structured approach.
Absolutely.
And it's about really understanding how to manage risk
Mm-hmm.
because the market moves so quickly.
Your best.
And there's so much information asymmetry
Right.
that just relying on intuition is not going to cut it.
No, it's not going to be enough.
So,
The document lays out 8 distinct strategies that it recommends.
strategy.
And it presents them as this really comprehensive set of tools.
Okay.
So if you're serious about trading crypto effectively in 2025,
Yeah.
these are the things you need to be thinking about.
It's a roadmap.
It is like a roadmap for navigating this really complex world.
Okay, so let's dive into some of these strategies
Absolutely.
and, really get into the nitty-gritty of what they mean for you, the listener.
Yeah, let's make it practical.
So the first one that really jumped out at me was advanced technical analysis assisted by artificial intelligence.
Yeah, that's a hot topic right now.
It is a hot topic.
Combining AI and technical analysis.
Okay, so unpack this a little bit.
Sure.
It talks about taking, those classic technical indicators that we've all heard of.
Right.
RSI, Mesity moving averages, Bollinger Bands.
The classics.
All that good stuff.
Yeah.
And then it's like, okay, let's add machine learning algorithms into the mix.
Right.
So what's the real benefit of bringing AI into this?
Well, the exciting thing here is the potential for much more sophisticated pattern recognition.
Okay.
Traditional technical analysis is still valuable,
Yeah.
but sometimes it can be a bit misleading, like it could be false signals.
Sad fakes in the market?
Exactly. So now imagine a computer program,
Yeah.
which is basically what a machine learning algorithm is, that can analyze years and years of price data.
So much data.
Huge amounts of data. And then it starts to learn to identify these patterns
Okay.
that might be too complex or subtle for a human to spot consistently.
So it's seeing things we can't.
In a way, yes, and because these algorithms are looking at so much data and learning from it,
Yeah.
they can potentially give you a much higher probability of identifying really accurate entry and exit points for your trades.
So that's fewer of those head fakes.
That's the goal. Less noise, more signal.
More confidence when you actually click the button and make that trade.
Exactly. And, the document talks about this idea of a differential advantage.
Yeah.
And in this case, it's the automation of analysis
Okay.
and potentially higher predictive accuracy.
Less time staring at charts.
That's part of it, but also potentially making better decisions.
Right, because the AI is doing a lot of that heavy lifting for you.
It's like having a tireless research assistant,
I like that.
constantly crunching the numbers, looking for opportunities and risks. Yeah, and that frees you up to think about your overall strategy.
Right, step back from the noise.
Exactly.
All right, so the second strategy, this one is called swing trading, based on medium-term trends.
Okay.
This might sound a little bit more familiar to some people.
It might. Swing trading has been around for a while.
It is.
And the basic idea is to try and capture gains
So,
over a period of days or weeks.
so not like day trading.
No, not those super short-term moves.
All right.
It's about riding those price movements that last a bit longer.
Right.
But the document is very clear that it's not just about looking at price charts in isolation.
Right.
You also need to pay attention to fundamental events.
Okay, so what kind of things are we talking about?
Well, it could be anything from a new technology being released for a particular crypto project
Oh,
to important updates to the underlying blockchain technology.
Like a major upgrade.
Exactly. Or even when big institutional investors make significant moves. Yeah, exactly. You need to understand those underlying factors that can drive price changes.
So it's about combining the technical analysis.
Yes, looking at the charts.
With an understanding of what's actually happening in the news and with the technology.
Absolutely. It's about trying to filter out all of that short-term noise in the market.
The FOMO.
Yeah, all of that. And instead, making more reasoned decisions based on where cryptocurrency is likely to go over the next few weeks.
Not just the next few minutes.
Right.
So that differential advantage here is more rational decision-making.
Yes, it's about taking a step back and seeing the bigger picture, the sustained trends.
Instead of getting caught up in all the little ups and downs.
Exactly.
All right, let's move on to strategy number 3. This one is called automation via algorithmic trading bots.
Okay, bots.
Bots, yeah. And I think this is something that could be really appealing to people who are busy. You know, maybe you have a job and a family.
Yeah, definitely.
They can't be staring at charts all day.
Right. So the basic idea here is using computer programs. These bots to automatically execute trades based on a set of rules that you define.
Okay, so you're basically programming the bot to say, hey, if this happens, then do this.
Exactly. And those rules can be based on all sorts of things.
Like what?
Well, it could be hitting certain price levels, like areas where the price has historically found support or resistance. It could be sudden increases in trading volume or even combinations of those technical signals we talked about earlier.
Like a confluence of indicators.
Exactly. And some of these more advanced bots are even using adaptive logic and machine learning.
So the bots are getting smarter.
They're becoming more sophisticated. Adaptive logic basically means the bot can adjust its strategies.
So it's learning as it goes.
In a way, yes. It's adapting to how the market is behaving.
Like a human trader would.
Much like a skilled trader would.
Interesting.
Yeah, so you have these bots that can operate 24/7.
Always on.
Never sleeping. And maybe even more importantly...
What's that?
They take the emotion out of trading.
Ah, that's huge.
No, because we all know how emotions can affect our decisions.
Fear and greed.
Exactly.
Right.
So no more panic selling because the price suddenly drops.
Right.
Or, FOMOing in because everyone else is buying.
Right.
The bot just follows its instructions.
So that elimination of emotional bias
can be massive.
It can really help.
It can make a huge difference in your trading results.
Okay, so let's skip ahead a little bit.
Sure.
And talk about something that's really fundamental to your overall approach, which is strategic diversification of the crypto portfolio.
Right, portfolio management.
Exactly. And this isn't about, making one specific trade.
Yeah.
This is about how you structure your entire crypto holdings.
Right.
So the document talks about spreading your investment capital across different categories within the crypto world.
It's about not putting all your eggs in one basket.
Exactly. And it mentions things like projects focused on infrastructure, stablecoins tokens related to artificial intelligence, decentralized finance projects, DeFi.
Lots of different areas.
So many different areas.
Yeah.
And the goal here is to reduce the risk that if one particular sector of the crypto market declines, your whole portfolio doesn't tank.
You're spreading the risk.
Exactly. So it's about minimizing systemic risk and improving your overall financial resilience.
Right, and that can provide a lot of peace of mind.
Especially if you're in this for the long haul.
Absolutely, because different sectors within the crypto space can react to market events in very different ways.
So give me an example.
Well, let's say we have a market downturn.
Okay.
Stablecoins might hold their value better than more speculative DeFi tokens.
Because they're pegged to something.
Exactly. So by diversifying, you're aiming to build a more balanced portfolio that can withstand different kinds of market conditions.
Makes sense. All right, let's move on to trading based on market sentiment analysis.
Interesting one.
It is. This sounds like we're trying to read the mood of the market.
Yeah, that's a good way to put it.
But like on a massive scale.
Exactly. It's about understanding the general attitude or feeling of the people participating in the market.
Okay.
And there are various tools for doing this.
Like what?
Well, you can look at fear and greed indices, which try to quantify the overall sentiment.
Okay.
You can analyze the tone of discussions on social media platforms.
Sentiment on Twitter.
Exactly. And you can track metrics like social volume.
So how much people are talking about a particular cryptocurrency?
Right. So by gauging whether the market is generally optimistic or pessimistic, fearful or greedy,
Right.
you might be able to anticipate those big herd movements and potential changes in trends
before they become obvious to everyone else.
That's the goal, early identification.
So sentiment can be a leading indicator.
It can be. For example, let's say you see extreme levels of fear in the market. But the underlying fundamentals of a particular asset still look strong.
That could be a good time to buy.
It could potentially signal a buying opportunity.
Before everyone else catches on.
Right. On the other hand, if you see excessive greed, that could be a warning sign that the market might be overheated.
And due for a correction.
Exactly.
Okay, let's talk about a strategy that's often recommended for long-term investors.
Sure.
And that is systematic investing via dollar cost averaging, or DCA.
DCA, yes, a classic.
A classic, and it's a really simple strategy.
It is very straightforward.
But often very effective.
Yes. It involves investing a fixed amount of money into a particular asset at regular intervals.
So like every week or every month.
Exactly. And you do this regardless of what the price is at that specific time.
So if the price is high one week,
you buy fewer coins.
And if it's low the next week,
you buy more coins.
And over time, this helps to average out your purchase price.
It does. It smooths out those price swings.
So you're not trying to time the market perfectly.
Exactly. And that can be very difficult to do consistently.
It is really hard.
So with DCA, you're just sticking to a predetermined schedule.
It's more of a hands-off approach.
It can be, and it can often lead to better results over the long run.
Than trying to guess when the market has hit its bottom.
Right, because you're taking the emotion out of it.
Okay, finally, let's touch on profit-taking and loss control via scaled levels.
Risk management.
This sounds really important for any kind of trading.
It is absolutely fundamental, and this strategy emphasizes the importance of deciding in advance. At what price levels you're going to take profits.
If a trade goes your way.
Yes, these are your take profit levels.
That profit.
And also, at what price you'll cut your losses if a trade moves against you.
Stop loss.
Those are your stop loss levels.
Okay, and the scaled levels part of it.
That suggests setting multiple take profit points.
So you're not just trying to get out all at once.
Exactly. You're gradually realizing gains as the price moves favorably. Rather than trying to time the absolute peak perfectly.
Because that's almost impossible.
It is very difficult.
So it's about automating those critical decisions.
Yes, when to get in and when to get out.
And it really forces you to be disciplined.
It does. It helps you to stick to your trading plan.
Even when your emotions are telling you to do something else.
Exactly. And it prevents you from getting too greedy.
Right.
Holding on to a winning trade for too long or letting those losing trades run.
Out of hope or fear.
Right. So by setting these levels in advance, you're making rational decisions. Before emotions can cloud your judgment.
That's key. So we've gone through all 8 of these strategies.
We have.
What are the key takeaways here?
Well, I think the biggest one is that succeeding in crypto trading in 2025 is going to require a professional mindset and the use of sophisticated analytical tools.
So it's not just a hobby anymore.
It's becoming more and more competitive.
Right.
And these 8 strategies, they're not meant to be used in isolation. The real power comes from combining different but complementary approaches.
So finding what works for you.
Exactly. And also having a well-defined framework for managing risk.
Risk management is crucial.
It is. And the increasing availability of automated tools and artificial intelligence is creating a significant advantage.
For those who know how to use them.
Absolutely.
So what are some practical steps that our listener can take?
Well, the document offers some excellent recommendations. The first one is to understand your own risk tolerance. Are you conservative, moderate, or aggressive?
Know yourself.
Exactly. And define your financial goals.
What are you trying to achieve?
Right. Then based on that self-assessment,
yeah,
you can start to select at least 2 of these strategies that work well together.
They complement each other.
Exactly. And also that align with your level of experience.
And the time that you have available.
Right. If you're just starting out,
yeah,
you probably don't want to jump straight into setting up complex algorithmic trading bots.
Probably not.
And the document also emphasizes the need for a structured trading plan.
Okay, so what should that include?
Well, it should detail your entry and exit criteria.
When to buy, when to sell.
Exactly how you're going to manage your capital.
Right.
And how you will evaluate your performance over time.
Track your results.
Exactly. And keeping a trading journal.
Writing it all down.
Yes. Recording your trades, both the wins and the losses, is incredibly valuable.
For learning from your mistakes.
Absolutely.
So exploring automation tools, even if it's just starting with something simple like setting up price alerts,
Yeah, price alerts can be helpful.
could be a good first step.
And then as you become more comfortable, you can look into more advanced tools.
Like trading bots.
Yeah, or algorithmic trading platforms.
Oh.
Continuous learning is also essential.
Always learning.
Always, because this market is constantly evolving.
So stay up to date on technical analysis techniques.
Yes.
Understand those psychological factors that can influence your decisions.
That's key.
And keep an eye on how artificial intelligence is being used in the market.
It's changing everything.
And finally, be honest with yourself.
Yes.
Track your results using actual data.
Measure your performance.
Net profitability, win rate drawdown.
All important metrics.
And of course, stay informed about the broader context.
Absolutely.
Regulations, macroeconomic trends, new technologies.
It's all connected.
It's a holistic approach.
It is.
Combining strategic thinking, disciplined execution, and a commitment to continuous learning.
That's the recipe for success.
So to sum it all up,
Yes.
this deep dive into cryptocurrency trading strategies for 2025 really emphasizes the need for a thoughtful, informed, and professional approach.
Absolutely.
Speculating or following the latest hype is not going to cut it.
It's not a sustainable strategy.
So move beyond the hype.
Yes.
And adopt a more systematic and analytical approach.
That's the key.
So here's a final thought for you, our listener.
Okay.
Considering these 8 expert-recommended strategies, which one or which combination of them resonates most with your own financial goals and risk tolerance?
It's a personal choice.
It is. And how might the increasing role of AI, not just in trading tools, but also in how we learn about financial markets, how might that reshape your journey in the crypto space?
It's something to think about.
It is something to ponder. It's definitely an exciting time to be involved in this world.
It is.
Thanks for taking this deep dive with us.
Absolutely.
Catch you next time.
See you then.